Hi there, welcome to Kneppy Invest and welcome to June 26, 2024. We have just over 1 hour left of normal trading today, and the markets have had a little bit of a bounce today. At one point this morning, the markets were down, and when I say markets, I'm talking about the SGR and the All Ords. Both of those indices were down about 1.1% at one point. So we have seen a little bit of a recovery during the day, and that's a good sign moving forward. And in fact, all tech is up. Uh, but other than the markets being down today, relatively boring in terms of announcements. No massive announcements, no announcements that really moved the needle on any company on the ASX. However, I have come up with the top 5 announcements of the day, and I am excited to be talking about a few of these companies because a few of these companies have popped up onto my radar in recent times simply because of their chart. Now, I do envisage this particular video to be this rundown video to be a little bit shorter than other ones because of the lack of excitement in the market in terms of announcements. But I have planned to record another video just after this, and that video is on my trading view setup because I have been getting quite a few questions in regards to that. So I thought instead of answering all these questions individually, I'll do a standalone video and then I can redirect all those questions to this particular video that I will release on the morning of June 27th or June 28th, depending on my mood. Maybe not my mood, but how I feel after I record these two videos. So typically, the editing process is longer than the recording process because it takes a while for the videos to render. In fact, editing takes very little time. Manual editing takes very little time. It's just rendering these videos into the right format, which sometimes is annoying. Anyway, can take up to about 30 minutes to do that per video. So the agenda for today's video is fairly similar than other ones. I'm going to have a look at one tweet, and then we'll have a look at the ASX today, and then looking at the best and worst performing indices, sectors, and companies. And then we'll talk about the top 5 announcements of the day. And then I might have a look at a few charts, depending what pops up. And in fact, I have a couple of companies on my watch list, so maybe I will look at the charts for these companies or at the end of today's video. So let's start today's video by looking at a tweet. One tweet. This is from Nikita Beer. Some guy bought Rivian cores. Rivian is an automaker, EV automaker in America. One of the largest shareholders of this company has been Amazon, and I did hear some podcasters. I'm pretty sure it was the Acquirers podcast with Tobias Carlisle. Talk about Rivian. Now, talking about the Rivian car itself is really nice, but what happens if Rivian goes bust? How are people going to get their Rivian car serviced? And then someone said, "Oh, maybe Amazon will buy it." And the reason I'm talking about that right now is because of this tweet, which I saw. It was really interesting because some guy bought Rivian cores this morning that expire on Friday for 12 cents each, and they're now worth $5.30. So it went from 12 cents to $5.30. He made $2 million in 5 hours. I wish I did that. And then a few of these replies were, hold on, there's a typo. You wrote some guy, but it should say someone in Congress and likely who oversees EV regulations. And then someone else wrote, someone's definitely getting investigated by the SEC. So my first question is, what happened to Rivian? Because then I went to see the chart, and the chart doesn't look that good, but I did notice the share price had popped up today. So let's have a look at the chart for, well, that's the wrong, I'm not looking at indicators. I'm looking at Rivian. Don't even know the ticker code. Rivian Automotive, RIVN. Share price of this company popped up by 8.6% today, but the chart looks pretty ugly. Nothing really nice in this. And unfortunately, it's too late to see the after hours trading here. For some reason, TradingView doesn't have that at this point in time. But you know who does? Nasdaq site. So this is the Nasdaq site. So share price up 8.6%. But if you go to the after hours section, here it is, after hours section. In fact, you can see the chart popping up in after hours. The share price in after hours for Rivian Automotive is up 62.85%. So my first thought was, what's happening here? I went into the press releases, and here we go. Rivian, this is 8 hours ago. So this would have been 7 a.m. local time. Rivian and Volkswagen Group announced plans for joint venture to create industry-leading vehicle software technology and for strategic investment by Volkswagen. So I'll open up this, and what is the amount of this particular investment? Initially, it's $1 billion with up to $4 billion in planned additional investment for a total expected deal size of $5 billion. Now, I am a Volkswagen shareholder, and I would say one of the safest companies in my portfolio is Volkswagen right now. Not because I think the company is amazing, has amazing quality, it's the valuation. So the valuation, let's have a look at my USA portfolio. Great day for my USA portfolio, by the way. And where's Volkswagen here? So the chart looks pretty ugly, but this company has a market cap of 56 billion, dividend yield of 8.5%, and a P ratio of 3.5. You might say, well, that's probably on earnings that are a little bit skewed positively, but no. If you look at the company's profit over the last 5 years, this is a profit. 13.4 billion, 8 billion, 14.8 billion, 14.8 billion, 16 billion. So that PE ratio hasn't significantly increased over the past few years. And that just showed that's screaming this is really good value. And I'm actually a big fan of what Volkswagen is doing. I'm a pretty big fan of some of their brands, including Audi. So this is an investment I made quite a few years ago, and I'm just not hanging on. I'm just holding on to these shares no matter what at this point in time, just because of valuation. Going back to my roots, buying companies because they looked pretty good value. This is one of those instances where I did exactly that. Don't think this is a high quality company because it's an automaker, but that's exactly what I've done. And getting in bed with Rivian, I don't know about that, but it could be beneficial for both companies. Definitely beneficial for Rivian because there was chatter Rivian may not make it in the long term. And I think that chatter, there was maybe not rumors, but that fear has gone away with this investment by Volkswagen. And that's why the share price will pop up tomorrow on opening. That's why this person made $5 million in, was it again? $2 million in 5 hours. Another thing I want to talk about now, but it's not a tweet. This is just something that is a bit of a pet peeve for mine. So this is from news.com.au, so not the best source of information, from Alex Turner Cohen, finance reporter. $646 billion wiped from Nividia or Nvidia in biggest ever company loss in history of the world. I have a bit of a problem with the language within just the title of this particular announcement. So Nvidia share price fell 6% 2 days ago. Now, Nvidia overnight, share price rose almost 7%. So did we see any news articles from news outlets saying Nividia gained $600 billion overnight? No. And the reason I don't like this is just a wording of company loss in history. They did not lose anything. The valuation of the company fell, but they lost nothing. I just don't, and I've said this all the time, and I started to really hate this language about 10 years ago when I believe it was Qantas. Qantas had some write-downs, and that meant they had a loss in 1 year of $1 billion. And all the news articles was Qantas lost $1 billion. Oh, they're in trouble, that sort of thing. But it's not, in that case, Qantas case, I can actually see that. But when a share price drops, doesn't mean a company or a shareholder loses anything unless they sell out. And Nvidia, no one sold out of, well, some people sold out of the Nvidia shares, unfortunately, but it's not a loss because they're profitable, that sort of thing. So I just don't like these articles, these sort of articles stipulating that a company has lost something when the share price goes down in history of the world. And again, I can almost guarantee you there were no news articles about Nividia or Nvidia rising 7% today. So let's have a look. Nvidia news. Let's have a look. There might have been some. No, in fact, the first four popping up. Let's just zoom in. First four popping up. Company loses $646 billion in bloodbath. Nvidia suffers biggest loss in world history from Yahoo Finance, which might be the same one as that. Nividia enters correction territory as slump extends into third session. Well, Nvidia's just risen 7%. Nvidia is no longer the most valuable company in the world. Should you buy the dip in Nvidia? Blah, blah, blah. So nothing about Nvidia gaining or winning or whatever $600 billion just today. Anyway, so that's a little bit of I wouldn't call it semantics, but I just don't like that sort of. I understand what media people are doing because drama sells. I don't say newspapers, but they're not selling newspapers. Drama brings in the readers. This is the fundamental truth when it comes to journalism. You have to increase the drama in your articles, particularly the titles, to draw in the readers. And that's why they actually wrote it like that. It's probably not the journalist's title, probably someone else, but just don't fall victim to that sort of journalism. Nvidia did not lose any money. The valuation went down, but then the valuation responded. And by the way, let's have a look at the chart for Nvidia. This video is not going to go 30 minutes. I was planning this video to go 30 minutes, but so this is a chart for Nvidia. What did I do that for? So do you see anything wrong with that? No. And see in the past, you always see these little drops in share price. In fact, everyone was calling for the end of Nvidia. When was it? It was the 19th of April when the share price dropped 10% in one day. Everyone was saying, oh, this is the end of Nvidia. The bubble has burst. And you could have bought that day at $80. Now it's $126. You could have made 50% if you bought on that day. And I have seen this now a few times with NVIDIA. The bears come in force, and I think the bubble has burst, and then the next day share price goes on a tear. And just by looking at this chart, and I'm a shareholder of this company, and I have been thinking, should I sell? Because I think the froth is getting a little bit too much for this company. But at this point in time, after the movement in the share price today, no reason to think about selling shares in this company. The bulls are back in charge. Okay, so let's have a look at the ASX today. And yeah, overall a negative day on the market, but we have seen a bit of a recovery, although it's just fallen since I said that. But let's have a look at the best performing sectors and indices, and IT's up. And one of the reasons IT is up is because, well, one of the reasons we're down and IT is up is because which indice in America do you think rallied today and was up by over 1%? Yes, the Nasdaq was up about 1.6%. Could be wrong with that. Nasdaq was up 1.16%. I was actually a fair bit off. But the Dow Jones was down 0.76%. And the Australian markets are more likely to follow the Dow Jones than the Nasdaq because we don't have many tech companies on the ASX. We have way more banks or financials, way more miners, and that's more akin to the Dow Jones Industrial than the Nasdaq. So you always see us follow, not always, but we tend to follow the Dow Jones instead of the Nasdaq. However, we're quite a bit weaker than the Dow Jones in saying that because there's better quality companies in the Dow Jones than there are on the ASX. The biggest companies in the ASX are low quality companies. The biggest companies in the Dow Jones Industrial are really good quality companies. So there is a little bit of difference between the two indices. Anyway, small rant over. So IT up, energy's had a good day. Utilities, I suppose, relatively, that's had a good day as well. While discretionary and real estate, I wish I had a vomit bag because both of those particular sectors down big by over 1.5%, and financials, industries, and materials down big as well. And the only indice, well, that's not true because that's not all this is. I'm going to say the only indice up is IT, but we also have energy, utilities, and the ASX All Technology is also up. And the worst performing indice is gold, down at 2.85%. I have or did not have a look at gold, so gold must have fallen. No, maybe our currency dropped. Ooh, copper's starting to look weak, isn't it? Pretty sure Bitcoin had a bit of a bounce. Up 2.56%, nothing big. Yeah, so let's have a look at the ASX 20. So we already know that tech energies had a good day. So ASX 20 only down 0.71%. So I would say probably 6 companies up, 14 down. Let's have a look. 5, it's close. 5 up, 15 down. I'm already thinking WiseTech's up, maybe Real Estate Group or REA Group, maybe Woodside, Santos, and everything else down. So that's 4, maybe one else. So let's have a look at the best performing companies in the ASX 20. WiseTech, Woodside, Aristocrat, CSL, and Santos. So 2 energy companies plus WiseTech. So it's fairly simple, and REA Group's not there, but it's only down 0.3%. Worst performing companies, Wesfarmers. Goodman Group, QB Insurance, ANZ Group, and Transurban. Okay, so let's get to the best performing companies today, and then we'll have a look at the worst performing companies. And I have Actinogen Medical is not in my top 5 announcements of the day, but I'm pretty sure this company did release an announcement. Yes, positive Xanamem biomarker trial published in journal ASGR. Not the sort of announcement that would probably get me interested in the company. It's just a trial published in an article or journal, whatever. So looks like the market says, Michael, you're wrong. That's my first name, by the way. You are wrong. This is an announcement to get excited. So let's have a look at the chart for Actinogen. Is this a breakout? Ooh. If the share price didn't rally for this company back in February, I would even be more interested in this company. But I am definitely going to put this on my radar because this chart is starting to look good. And that's a good thing about charting or technical analysis. You don't have to know anything about the company. Just look at the chart. The chart looks actually interesting. This is a little bit of a pleasant surprise. Actinogen market cap is only 82 million, so a little bit more than I thought. So I'm gonna have a bit of a read of this company after I've done recording the 2 videos. ACW. Thank you, Actinogen. Yeah, the chart's not looking all that bad. A potential breakout today. This one-day candlestick is really bullish. So potential breakout for Actinogen. It did not make it in my top 5, and probably it should have. In fact, I would have put Actinogen at number 1 if I knew about it a little bit earlier. That's the problems of me going into these videos blind without looking at these first. Sometimes I do, but a lot of times I don't. And today I didn't. Okay, so let's head back to this. Melbana Energy. Some of these, I'm trying to think if I do remember seeing any announcements from these companies. Sometimes you can just tell by the turnover, very low turnover. A lot of these. We have Bluebet here, but low turnover. Atomos, low turnover. So nothing of interest other than Actinogen. In fact, I didn't even have to have a look at the market cap of Actinogen because it's up to 104.6 million because share price has rallied 25.8% today. Yeah, so it's over 100 million market cap. And by market cap, we have Len Resources, BrainChip, EBR Systems has had a nice rally today. I'm pretty sure EBR Systems, let's have a look. See, it wasn't a little bit of, it's had 2 really nice days in a row. Okay, so it was a nice uptrend, 2 really nice days in a row for EBR Systems. So not really an DGL's here, good. Optiscan Imaging, another company who has been popping up onto my radar because of their chart, and the chart looks like that. Just keeps going up. Look at the volume, increasing volume as well. And I have no idea what this company does. By the ticker code, oil, you'd say maybe it's a petrol company, but Optiscan Imaging tells me it's an imaging company, so some sort of health company. I could be completely wrong. Engaging development of endomicroscopic imaging technologies. Yeah, okay. So it seems like the market likes this company for some reason. And I'm going to find out why. And otherwise, we have Biome, another good day for that company. And that chart for Biome has been really good. So increased excitement in this company. And yeah, after a period of time where the share price did nothing, just going sideways, it's now taken off again. Some really good volume coming in the last 6 days as well. So Biome is doing really well as well. And market cap of that company is up to $117 million. And EZZ Life Sciences, up 10%. And that makes me happy as well. I wouldn't say it's a similar company to Biome, but share price at a new high. No complaints from me because I'm a shareholder. Let's have a look at the worst performing companies today, and I don't think we'll see anything of interest here. Foss Capital is a company I've been looking at recently, but a lot of illiquidity in that, and share price of that company is down 20% on $3,000 turnover, so we can move on to the next one. And as we try to find the next one, Synlait Milk is down big again, down 15%. because unless the shareholders approve the loan, it's a $130 million loan, Sine Milk is in trouble. I'm pretty sure they will approve it, because why wouldn't shareholders approve it? But other than that, nothing else of interest there. Let's have a look by market cap. Harvey Norman's down. I don't remember Harvey Norman release anything today. I could be wrong, but that's a fairly big drop for a company without this size, without releasing anything. Change of directors notice, but that was yesterday morning. I wonder if Jerry's bought anything. Let's have a look. Number acquired. Okay, not interested in that at all. I'm just going to have a quick look at Harvey Norman's chart, just for kicks. And yeah, what's happened today with Harvey Norman? Something's happened today. I'm just going to Google Harvey Norman because I might be missing some news. I've got to spell it right. Harvey Norman news. Jerry Harbin back buying up shares in retailer. Nothing of note that I can see here. So maybe this is just simple noise. Collins Food down 9%. That's interesting. So Collins Food share price rallied yesterday, and I was wondering about it because the results were good, but their outlook was tepid. It was uncertain, and I wasn't that excited about it, but the market was. So I thought maybe the market was right and I was wrong. But look at the share price. Look at the chart today. Above $10 yesterday, and share price has pulled all the way back to $9.20, where it was before trading began yesterday. So obviously there was a bit of excitement because people thought the results were pretty good, and then maybe they delved a little bit deeper into the announcement, saw the outlook, and went, "Oh, geez, these are not good." Or maybe some fund managers put some new numbers in regards to the lack of growth. I'm pretty sure the same-store sales were actually negative in the first 7 months or 7 weeks of this particular financial year. And when the fundies put the new numbers based off that into their machines or their algorithm, whatever, they came out with significantly lower fair value, and that's why the share price is down. All right, this is going on Qualitas. What's happening with Qualitas? Cool. Whoa, down 10%. I'm not going to do a chart section of this video, I've just decided. It's actually rebounded as well. It's got down as low as, okay. So this is just a bit of volatility, some noise around. I have a feeling this is not, look, down, it says down 3%. And down, yeah, so let's have a look at the course of sales. Yeah, it briefly went down at $2.09, briefly, for like 14 minutes, and then went back up to $2.25. So this was just someone panicking and just selling on market, and the share price has rallied. So I wouldn't even look at the chart now and all this company right now. And other than that, big tin cans down. Dreadnought, we're going to talk about Dreadnought. And that's it for companies who have performed badly today. Harvey Norman's among them. And I'm interested to see why the share price of that company is down. Okay, so let's get to the top 5 announcements of the day. And what we're going to do is I'll start today at number 5. No honorable mentions. I was thinking of looking at Airtasker and Media. They announced a partnership today, and I was like, whatever. And the share price of both are either flat or down. So the market said, we don't really care about this partnership between Media and Airtasker. In fact, Media's share price is down 4.5%. And the announcement was, I forget exactly, I did open it up, and I was like, whatever. Yeah, anyway, I think it was Airtasker wants to get their name out there a little bit more. I just don't like the business model of Airtasker. And this, of course, this announcement is going to take 5 years to open up for some reason. So I'm going to have a look at the chart for both these companies. So I have a feeling the chart of both companies is not that interesting. So that's Airtasker, bit of a squeeze. So if you do look at Bollinger Bands, you've probably got a squeeze in the Bollinger Bands. Whenever you see a decrease in sort of chart, decrease in volatility, eventually that volatility is going to explode one way or the other, either up or down. So that's why people do look at Bollinger Bands, because, and particularly Bollinger Band squeezes, is because eventually that squeeze is going to explode. You squeeze anything, it eventually explodes. So people were saying, well, it could go up or could go down. And Media, yeah, that chart is not that exciting at all. Okay, and now let's get to, actually, we're going to have a look at the, I've closed it. Oh, stupid me. Airtasker joined forces with Nividia in $6 million media partnership to turbocharge Australian growth. So I'm pretty sure terms of the partnership provide Airtasker with $6 million in media inventory in exchange for a 2-year, $5 million convertible note with a 5.8% coupon rate. At maturity, Airtasker has the option to convert the outstanding note and coupon into ordinary shares at a 10% discount to Airtasker's 30 trading day volume weighted average, or VWAP, or repay the outstanding note and coupon in cash. So not the sort of announcement that would get me excited at all. And that's one of the reasons he did make it into top 5. Coming in number 5, we have Star Entertainment Group, a company that's featured quite a lot, and they have a new CEO and managing director. So sometimes you can see whether the market likes this appointment just by the share price. If it's down a lot, they hate it. If it's up a lot, they like it. If it's flat, when the overall market's down quite a bit, then maybe the market thinks this is okay. Not I don't know. This is an interesting one. So the guy's name is Steve McCann. He was the CEO and managing director at Crown, so he does have that experience. But Crown wasn't performing that well. He also was the Group Chief Executive Officer of Real Estate Development and Investment Group, Lendlease Corporation. And before that, in 2005, he worked in senior leadership roles at ABN AMRO and Bankers Trust. So a new CEO, and I saw his background. I went, okay, I can sort of see it. You can sort of see he has that experience with Crown. How long did he work for Crown? I don't think it says it here, but yeah. So this could be a good announcement or appointment. I don't know at this point in time. And should we even look at Star Entertainment Group's chart? Let's have a look-see. And yeah, nothing yet. Nothing. Patience. When it comes to this company, patience. And I think there is potential that eventually the patience may pay off. When the sentiment starts to shift, there's still a bit of negative sentiment in this sector. And eventually, I believe that negative sentiment will go away. And this company could look really cheap eventually. But I don't think it's just there just yet. Or there just yet. Didn't have to put there twice. So coming in number 5, we have Star Entertainment Group. Coming in number 4, I did actually mention this company either yesterday or the day before. Aurora Labs, share price has gone up again, 7% today. A3D, or Aurora Labs, signs MOU with turbine machine genes. This is a 3D printing company. So I think I mentioned either yesterday or the day before that there's a little bit of excitement in this space. So Aurora Labs, and there might be one or two others. Titomic, I think. No, maybe not. Is Titomic in this space, 3D printing? I think they might be. So turbine machine genes to work with Aurora Labs to apply its novel evolutionary AI machine learning to report quantitatively on the emerging field of 3D printing of quality mission-critical turbine parts. As a first mover, Aurora Labs continues to fast-track 3D printed turbine building in the Australian market. So one of the reasons I don't like these sort of announcements is because how, in terms of financials, profit, cash flow, how is this announcement going to generate that? We just have no idea. No idea at all. And that's the reason why I don't really read these announcements and then go off and buy some shares in a company because of a breakout. But at this point in time, the market loves this company until the last 2 days, by the way, because the share price has pulled back a little bit. Got to $10 and pulled back. But this chart looks pretty good. And we have seen a sustained increase in volume as well. Nothing I look at. But the time to get really interested in this company would have been back in late April when the share price really broke out at about 3 cents. It's now 8.6 cents. And whether this momentum can continue, I don't know. Because if you have a look at the most recent Appendix 4C, let's go back 3 months. This company is not generating much money. And when I say money, I'm not talking about profit. I'm talking about cash flow. I'm not talking about cash flow. I'm just talking about receipts. So $59,000 of receipts in the quarter and only $220,000 receipts in the 9 months. So I'd probably like to see that start to accelerate. And maybe that's what the market is thinking, that Aurora Labs receipts and revenue will start to accelerate. Maybe that is what the market is thinking right now. Otherwise, I'm not quite interested in Aurora Labs just yet. I need to see proof that their business model is working. Not there just yet. So Aurora Labs comes in at number 4. Coming in number 3 is a company I do own, and I do think this is a potential turnaround. Now, I'm a little bit surprised the share price is down. Now, this company is also traded on the New Zealand Stock Exchange, and the share price was up 4% last time I looked. Let's have a look. EROAD, NZX. Oh, it's up 1%. So it got as high as $1.04. So it was really easy to calculate the percentage change because the share price was $1 yesterday. Now it's $1.01. So a little bit of selling, but this is, again, not the sort of announcement that would get me overly excited, but they've also released their annual shareholders meeting addresses. I haven't had a look at that because it's not market sensitive. But EROAD signs material customer contract. A lot of, what's the word? A lot of secrecy in this announcement. The company is unable to announce the name of the customer as per terms of the agreement. And again, there's no financial information with this announcement. So this is the reason why I don't usually fall victim to these announcements, material customer contract, because a lot of these types of announcements have no financial information in it. We just don't know how much EROAD will generate, or how much cash or revenue or profit EROAD will generate from this particular relationship. Maybe very little. Maybe the margins are really tiny, and I have seen that in the past. So I'm not surprised the market hasn't been as enthusiastic as you might think, but I'm a little bit surprised the share price is actually down. And the funny thing is, I actually did have a look on Open how the market was going to react, and someone just sold on market. I don't think the person who sold on Open even saw there was an announcement. They just wanted to sell the shares on Open because the day was going to be negative, and that's why the share price opened at 93 cents, down 2%. Anyway, now let's have a look at the chart for this company. And this chart really reminds me of Churn Track, MA Offshore quite a few years ago, because this company was probably, I wouldn't necessarily say it was a market darling, but the share price of EROAD got as high as $5.40 back in July 2021. And then share price entered this long-term downtrend. And just look at MA Offshore and Gendrax charts quite a few years ago. And both of those companies saw the share price move into a long-term downtrend. And both of those companies saw the share price go into a consolidation phase for quite a few years. So EROAD share price has been going sideways for about a year. Now, it could continue for another year, but I think eventually the share price of this company will break out because they have started to release more positive information, positive news flows, that sort of thing. And $1 is the important level. So share price of this company has reached $1 in New Zealand, of course, exchange rates, but $1 is naturally a resistance level or a support level. And you can just see that share price has struggled to get above $1 since about December last year. It's hit it 3 times, actually 4 times, and has failed to get above that level because, again, $1 is an emotional, we'll say a financial, emotional obstacle for shareholders. In fact, a lot of shareholders who buy shares well below $1 will put their sell bid right at $1. That's what they do. I'm not kidding you. That's what they do. In fact, wouldn't be surprised to see, there are a few shares being sold at $1, but just below $1, we have a lot too. A lot of shareholders also do that because they know $1 is an important hurdle and they get in before the share price hits $1. I think that's it's a savvy little strategy. Anyway, but if the share price of EROAD gets above $1, I will add to my position. That is my plan moving forward for this company. And it just reminds me, a beautiful looking chart. We're getting this set up. Moving average starting to go up. We just need to see a bit of a rally in the share price now. That's what I want to see. Today, it hasn't hurt, but I just need to see that rally. Share price going sideways over the past 3 weeks. So that's more of a trade, but it's also back off. I think the company is starting to turn things around. So EROAD coming in number 3. Coming in number 2, we have the company I know nothing about, Clearvue Technologies. However, this company popped onto my radar yesterday because the share price had rallied. So Clearvue Technologies up 2.8%. On the back of announcement, certifications prepare Clearvue for global commercialization. I do like the end bit of this particular title. Global commercialization. Wow. Now, because I know nothing about, or knew nothing, well, still know nothing about the company, I do remember this, their logo. I do remember that logo for some reason. The first thing I did is I went straight to the About section. Clearvue Technologies is an Australian technology company, yeah, of course they are, that operates in the building integrated photovoltaic BPIV sector, which involves the integration of solar technology into building services, specifically glass and building facades, to provide renewable energy. Clearvue has developed advanced glass technology that aims to preserve glass transparency to maintain building aesthetics while generating electricity. It sounds pretty good, doesn't it? It does sound interesting, I have to admit. That sounds really intriguing technology. But just because it sounds really intriguing technology doesn't mean the company will be a success. But just based off what I read there, I went, really interesting. And funny enough, in this space, I was reading another company called Frontier Energy. And this is another chart that's looking really interesting as well. And this is also a renewable energy company. Can't tell you what they exactly do, but they're talking about batteries, West Australia, that sort of thing. And if you have a look at the chart for Frontier Digital Ventures, whatever it's called, Frontier Energy, not Digital Ventures, that's another company. The chart's starting to look pretty good. Starting to look interesting. Look at the volume as well. Always look at the volume. Look at that volume really increasing the last 3 or 4 months, and that coincides with the share price starting to go up. And then let's have a look at Clearvue, and this is what interests me about this company. So share price was in a really nice uptrend. It's pulled back and possibly has breaking out again. Markup cap of this company is 133 million, so it's not a small company. So a good increase in volume over the last few days as well. Other than that, I sort of went through this particular announcement really quick, and there's no financial information. Didn't expect that to be in this at all, but a lot of jargon as well. Yeah, I just really liked what the company's doing, and I think, oh, sounds exciting, but it's a story stock at this point in time. I'm pretty sure it's a story stock. In fact, that's something I didn't do. I didn't have a look at the most recent Appendix 4C. So let's have a look at that now. Let's have a look at that now. In fact, these sort of reports, you can get a lot of information about the company. So they did, that's the wrong company. CPV. In fact, no, I'm pretty sure Frontier Energy doesn't have any revenue. Let's have a look at this company. Released their Appendix 4C on the 30th of April, so it's towards the end, which is sometimes not a good sign. It's interesting. The first highlight, commercial launch in Australia with the contract to supply Generation 2 Clearvue solar windows for the CFMEU Training and Wellness Centre in Melbourne. So this could be at an inflection point. So receipts, $9,000 for the quarter, $20,000 for the 9 months to date. So this is a baby and more of a story stock than anything else. But their technology sounds intriguing, doesn't it? Maybe it's just me. So coming number 2, we have Clearvue Technologies. Chart starting to look interesting. Yeah, if we just zoom in, it's a bit of I don't know what happened on the 24th of June. Share price rose 15.8% on that day, and they released no announcements. So that's a bit of, I wouldn't say noise, but something happened on that day. Okay, so let's have a look at the announcement of the day. A company called GWA Group released a trading update. Share price is up. So just because this is a trading update is the reason why this company comes in at number 1, not anywhere else, because there's a trading update. My favorite sort of announcement. Now, I I initially, when I actually opened up this training update, I was like, oh, what does this company do again? I have not had a look at this company in the past in depth. And then I went to see what the about section. There was no about section. I went, oh, this is why you should always have an about section. Always have an about section, please. Please, companies. So let's have a look. Oh, strategy update and site tour. Won't look at that. So I'm pretty sure they, for some reason, I was just thinking they sell kitchen stuff or something like that. Okay. Or maybe bath stuff, something like that. Yeah, bath stuff. Yeah, it seems like they have a lot of bath stuff here. So this is a fairly big company. Market cap is, what's the market cap? I'm saying 500 million or something like that. $628 million. I don't think this company has good growth. Let's have a look at the financials. We'll have a look at the historical financials. Revenue, in fact, is going backwards. Operating margins have been increasing and profits going nowhere as well. So this is probably one of the reasons why I have not had a look at this company in depth, because it's not a growth company. In fact, if anything, it's the opposite of a growth company. So there's nothing overly negative in this announcement apart from New Zealand. So revenue from GWA's New Zealand business has been impacted by the continued deterioration in housing and construction markets as that economy was in recession. And they talk about New Zealand lower down as well. And then they mentioned their expected revenue, expected EBIT, and they also announced their pre-tax significant items, that sort of thing. But the main thing about GWA was the market reaction. It wasn't negative. Share price is actually up. So overall, positive trading update from GWA Group, but not really the sort of company I would be all that interested in unless I see something exciting about the chart. So let's have a look at the chart. And in fact, there was a period of time here where the chart did look good. And this company did pop up on my radar a few times, but I never followed through. Look at the weekly chart, and you'll probably see the share price do nothing over a long period of time because, again, this company is not growing. In fact, you can just see that by the weekly chart. If you go all the way back to 2009, or maybe, no, they listed in 2010. Share price has done nothing since they listed. In fact, if the share price gets above 380, you sell. If the share price gets below 180, you buy. That's the history of this company. And right now it's 237. So it's actually closer to the low where you might buy compared to where you might sell. So that's coming in number one. We have GWA. So I was going to talk about or look at some other charts, but that's it for this video because I want to do my trading view setup. So I'm going to do that now. So if you have any questions, any thoughts, leave them in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.